Alright, what's up? Welcome to your first so-called lesson in the art of crypto trading course, I suppose. But yeah, this first lesson is going to cover my favorite way of reading charts and my favorite way of trading. And we have to first start off with patterns. So I have a watch list of about 200 coins. And whenever I skim through a coin, the first thing I always look out for is technical patterns such as this bull pennant, and a bunch of other patterns like falling wedges, rounded bottoms, the double bottoms. You hear me talk about those a lot in my videos, and there's a reason for that. So I've already created a Word document inside the Discord. It's under Quick Start Guide. You can find it over here. See, Quick Start Guide. This is where it is. I need you guys to really go through everything that I've drawn here, everything that I've written here. It will save you so many losses and like just lost money, man. This guide right here is going to save people in this group thousands of dollars. So I need you guys to read this through before you even start taking any of my signals. Read this through, understand it, and for this technical patterns thing, I need you guys to memorize this stuff. Okay, if you want to make it as a trader, you need to know your patterns. You can't expect it. Like I always like to say this. We are in a market right now, and in a market, you're trying to take other people's money. So doesn't it make sense that if you want to take other people's money, you have to be better than them? So I need you guys to study all of this, right? Don't start trading until you watch all of these videos, and especially do not start trading until you read this. Yeah, I know it looks long, but it's just 10,000 characters. You can get through it easy, right? It's not 10,000 words. So read this. Tough love, but it's for your own good. So anyways, first thing that I do is I always look for technical patterns. So right here, this is a textbook bull pennant, right? Read the document here. So textbook bull pennant, what usually happens? So the thing about technical patterns and the favorite ones that I like to trade are ones that have an apex, such as this bull pennant. See, when the price gets to the apex, it is forced to make a decision. Like people are forced to make a decision. Are we going to go up or are we going to come down? Which is why I love apexes, because one, you can either buy at the bottom here, or two, you can buy the breakout. A breakout simply means that, say, in this falling wedge right here, price, bam, bam, just consolidates here, consolidates. And then you either buy here because you know it's going to break out soon. Because when it gets to this point, it's either going to dump down or it's going to go up. It's just going to be one of the two. So firstly, number one option whenever you see patterns forming is you front run the pattern. So once you see that it has 1, 2, 3 touches, and on the note of patterns, you need to have at least 2 touches of each trend line for it to count as a pattern, as a valid pattern. So this is valid, while this is not. You can't draw a falling wedge like this because it's honestly, this looks more like a descending triangle than a falling wedge. But either way, you need 2 touches of both trend lines for it to count as a valid pattern. Yeah. So back to patterns. I always talk about buying the breakout. If you see any of my chart calls, you're going to see that I talk a lot about buy the breakout, buy the breakout. So what does a breakout mean? It simply means that it is starting to break this pattern and either pump, dump, or form a new pattern. So usually a breakout, a lot of people get the idea wrong. Like, oh, it's breaking out means it's going to the moon. No, that's not how it works. Usually a breakout is the beginning of a move. It is not the end of a move, and it definitely does not signify that it's just going to go up to the moon. So usually what you see on breakouts is it doesn't just go straight up all the way. Unless it's Dogecoin or something, then yeah, let's not talk about that. But usually after the price breaks out of a pattern, it tends to come back down to a previous resistance level before breaking higher, or it will come back down to retest the trend line. Yeah, this is very important to understand. When you buy a breakout, you have 3 options. The first is you enter on the breakout itself. See here, it's high risk because of fake outs. A fake out is simply when the price breaks out of the pattern, but it comes immediately back into the pattern, right? So this is also known as either a fake out or a bull trap. So it makes people think that it's breaking out, but in fact, it's just sort of market manipulation, right? What you see is there's going to be a candle, but there's going to be a long wick when it closes. This wick means that it was a fake out. So the price tried to break out of the pattern, but clearly it didn't. It didn't close outside the pattern, so that's not a breakout. In fact, while we're on the topic of a breakout, let's talk about how do you confirm a breakout. And the most important factor is volume. Now, on every single one of your charts, I don't care who you are, I want you to go onto indicators and search up volume, okay? This is a must-have on every chart, because volume is going to indicate whether or not it is a breakout or is it a fake out. So with every breakout, you need volume. So for example, right here on this falling wedge right here, notice how the volume isn't very high during the breakout. So the price does not move much. But the moment when we get volume is when the breakout truly goes into full swing. Similarly to here, this is definitely a breakout because notice how volume was really low for an extended period of time, and especially volume was low when it was consolidating within the pattern. But the way you confirm a breakout is you need volume. You need a spike of volume, because that means that there are enough people looking at that pattern when it is forming. So when it breaks out, every trader that knows their shit is going to get into the trade. So volume is very important. Without volume, it doesn't count as a breakout. And you just need to keep this in mind. Usually, if the price breaks out of a pattern without volume, chances are it's just going to fall right back into the pattern because not enough traders have that trade in their radar. So that's how you confirm a breakout. Yeah, you need a spike of volume. And I'm talking a big spike. I'm not talking about these baby spikes. I'm talking big spikes. Yeah. So that was method number 1 of buying the break, which is the moment you get volume confirmation and you start breaking out of the pattern, this would be your entry. Just buy the breakout. But that is not the safest entry. And if you do buy the breakout in this way, all you do is you set your stop loss within the pattern, because if the price comes back into the pattern, then you know you've been faked out and it's okay to get stopped out with a small loss. Now, the second way of buying the breakout is a retest, as I have mentioned before, where price comes down to retest either a previous level of resistance, because here's the thing about resistance and support. Previous resistance tends to become future support, and vice versa. Previous support becomes future resistance. So in a breakout pattern like this, well, number 1, you're going to get a breakout straight out, or number 2, you're going to get a retest of the trend line. If it's I don't care if it's a symmetrical triangle, a bull flag, which is sort of like this, you tend to get, once the price breaks out of these patterns, you tend to get a retest, right? Price doesn't go straight up. This right here, this is honestly one of the best entries you can get on any chart. If I see a breakout and a retest, I am buying that retest because it is so safe. What happens in a retest is that, firstly, you have to think of it this way. Usually, smart money, they are buying at the bottom of the patterns like this. They're not buying the breakout, right? That's not what smart money does. They buy at the bottom of the patterns because they know how to front run the market. They're experienced traders, so they know how to front run the market. So what happens is when the price breaks out, these people are already in quite a significant amount of profit. So it makes sense to take some profits. So that's why the price comes down. But here's what happens. Here's the beauty of a retest. A lot of buyers, the strongest group of buyers, would actually be waiting at the trend line right here because perhaps they didn't set an alert, so they missed the breakout. So now they want in. So the strongest group of buyers are going to be sitting around this trend line right here. So oftentimes what you find is after a retest, price will go and form a new higher high. So a retest is honestly one of the best entries you can get because it happens quite a lot, not all the time, but it happens quite a lot. In fact, right here, you can see price broke out of the pattern, came down for a retest, and then boom. Same thing here. You don't always get a retest, but if you do, that is the safest entry because your stop loss can be really tight. Imagine, because we are buying the retest with the premise that this is where the strongest group of buyers are. If the price were to fall down below this group of buyers, then we know our trade has been invalidated. So we just get stopped out. It's okay to take small losses. And the absolute golden entry is a retest and then break of the previous swing high. This is the safest, but honestly, it does not happen a lot. So what I would recommend you to do is stick to buying breakouts or retest, or like me, buy the bottom of the patterns. I love buying the bottom of the patterns. If you follow me for long enough, you know I talk about rounded bottoms a lot because rounded bottoms pays the bills. I love buying rounded bottoms at this area right here, or even at this area. So here's the beautiful thing about rounded bottoms. Oftentimes what you'll find is the price will sort of come down, 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 and at some point it's just going to start accumulating around a range, right? It will start accumulating, and then at some point it'll form a double bottom at a level, and then it'll form the first higher low. And once I get the confirmation of this higher low, that is my entry. And usually what ends up happening is price will sort of do this, and do this. It's really, really exponential. I'm talking about like 100% gains, 200% gains kind of gains, exponential. So just to put this into perspective, I am going to go into a trade that I've taken recently based on this rounded bottom pattern, which is on Aeon Bitcoin. So notice here how the price kept coming down, 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 and then it sort of reaccumulated, right? This is accumulation. And then you see the first higher low, and then you see a higher high. So if you wanted to enter a rounded bottom, you would have entered on this higher low right here. But alternatively, I had an even better entry on Aeon because it came down to retest the 200 EMA. I'm going to talk about the EMAs a bit in a future video, but at the moment, let's talk patterns, because patterns are the favorite thing that I like to do. So I bought Aeon at 330. I remember clearly. And look where Aeon went. Look where Aeon went from this rounded bottom. Aeon went all the way to do 180% gains in a month. This is the power of rounded bottoms and why I love trading them so much. In fact, watch. See here? This is another rounded bottom. See how it's rounded? This is another rounded bottom. You buy. Usually I pair rounded bottom patterns with a major exponential moving average. But again, we're going to talk about that later. Right now, I just want you to keep in mind that when I tell you to buy the bottom of a rounded bottom, like when I say a potential rounded bottom formation, this is what I mean. This is where I'm buying. This is where I'm looking to buy. Because if it pops, it's going to pop. So yeah, that is breakout patterns and rounded bottoms. In the next module, I'm probably going to get into reversal patterns. In fact, actually, let's just get reversal patterns over with as well, because that's another pattern that I love to trade. So a reversal pattern simply means that the trend is about to end, right? Just to give you guys an example right here, is a very common pattern known as the double top. So a double top usually, well, as the name implies, it is a double top. So usually you'll have the first high, the first top right here, and the second top. And the confirmation of a double top is when the price of the second top fails to break above the first top, which means it stops forming a higher high and a higher low. So usually after this candle right here, after this closes, in fact, this is brilliant because this candlestick pattern is known as a doji candle, which means very small body, see, very small body, but very long wicks. So once you get this, it usually means that the market is indecisive and it signals a trend reversal soon. And especially once you get this kind of a candle plus a double top, man, this would have been a beautiful, beautiful short. 27%, 41%. Man, once you get the hang of these patterns, you will make so much money. I'm telling you. So memorize this cheat sheet, yeah? Everything that you need to trade technical patterns is in this cheat sheet. I suppose the only thing that I haven't added is candlestick patterns. Yeah, I'll add that later. But back to the video. So that is a double top. Double bottoms is the same thing, except it is a bullish reversal pattern. So a double top is a bearish reversal pattern, which means the uptrend is coming to an end. A double bottom looks something like this. See, when you form these two bottoms right here, I would enter on the next candle. Usually it's quite a safe entry. And if you want an even safer entry, enter on this higher low right here. That means the trend is definitely reversing. So usually when I look out for a double bottom pattern, it almost is like during a downtrend, it'll keep coming down until at one point, it's going to form a double bottom. This is where you buy. Usually it means that the trend is reversing, right? Whenever you get into a downtrend, look out for a double bottom formation. And whenever you are in an uptrend, look out for a double top formation. But usually in a bull market, not all the double tops tend to play out. For example, over here, you see, this wouldn't be a double top. You know why? Because this is the first top and this is the second top. First top, second top. It broke through the neckline. So this is not a double top. But usually on the if you see any of these patterns on the higher time frames, it is usually an indicator that price is about to reverse. So I hope that is not too much for you to take in. These are the patterns that I'm looking out for. These are my favorite patterns, and as well as the cup and handle, where, sorry if this video is getting a bit long, but I really get excited when we talk about patterns. So cup and handle, you'll see around the bottom, and then you'll see the price sort of reaccumulate like this. Usually the handle does not fall below 1/3 of the cup, usually, but even 50% of the cup is still decent, but usually it doesn't fall below 1/3 of the cup. Usually when you see this kind of pattern, say you missed the entry on the bottom of the round the bottom, this would be your second entry. You buy either the breakout of the handle or you buy at the bottom of the pattern. And while we're on the topic of cup and handles, I know this is a bit much to take in, but just hear me out. All right, this is literally my entire trading philosophy not my entire trading philosophy, but it's a part of it. So usually the way I like to front run patterns is, say, whenever the price pumps and it starts doing this, right? Immediately I go. So this is the benefit of knowing your technical patterns inside and out, because before the price even does anything more than this, I am already drawing either a bull pennant, right? And if the price comes here and it bounces, then that would be my entry because I saw this bull pennant coming, right? But say if the price breaks lower, what to do? Then this wouldn't be a bull pennant anymore, right? You front run the patterns. Now this would start looking like a falling wedge. But what if the price breaks below the falling wedge? Then I would look for a rounded bottom formation. See here, rounded bottom. And then if the price doesn't break out from here and it starts coming down, then I start getting ready to draw a cup and handle. This is the beauty of knowing your technical patterns. You can front run the patterns and you know when to enter and when to exit. So yeah, I'm sorry if it's a bit too much to take in, but all of these patterns, memorize them, know them by heart. It will help you so much when you're trading. Like, once you know these patterns, you're going to be better than, I would say, 60, 70, 80% of the traders that do not know absolutely what the fuck they're doing. So memorize these patterns, right? Look out for them. If you're not sure about what patterns, whether or not this is a confirmed pattern or not, we have a channel called Technical Analysis Questions, right? In fact, I'm probably going to name this beginner charts in the future. Like, I'll figure out a system. But there's going to be a place. I want you to post your own charts. I don't want you to ask me everything. I want you to look at a chart and tell me what you think. And then if I feel like you're wrong, then I'll correct you. But I want you to read the charts on your own and tell me your thoughts. Don't wait for me to spoon feed you the charts. So whenever you see a potential pattern forming, put it in the channel, right? If I'm around, I will answer you. And if I'm not around, I will answer you eventually. So post your charts. Tell me what you think. Don't wait for me. This is how you get better. This is how you improve. Got it? We are in a market right now. You need to be better than other people in order to take their money. So if you didn't get any part of this video, rewatch this, right? This is lessons that I've learned from doing trading for a long time. This is not stuff that you learn overnight and be like, hey, I'm a genius. It doesn't work like that. Okay, so if there's anything that you do not understand, I want you to watch this video again, come to this website for a deep dive. I posted this website along with the file, and if there's anything you're unsure of, ask. There'll probably be a beginner section or like a beginner chart section. This Discord server is still pretty rudimentary, but I want you to ask, right? Chart it out on your own and tell me what you think. And if I feel like you're wrong, I will correct you. It's all part of the learning process. So with that said, this will be the end of episode 1. And as usual, man, may the gains be with you, man. Peace.